Hi there. FET, Artificial Intelligence, SuperIntelligence Alliance, is down by close to 2% as of now, and also this week. So it's pretty close. Let's take a look at it through the Wyckoff lens and see where it is going and whether there are any real moves that we observed. If you're new to my session, I'll cover the Wyckoff stage, potential trend change, as well as key price levels. These are education content only, not financial advice. If we look at the chart, this is the weekly chart of FET. We can see it's trying to stabilize around the yellow key level of 0.184. Okay, you see it's staying around the level over here, and at the same time, the volume has been declining. A lot of altcoins are showing this kind of behavior. You see these bubbles lining up. It's basically economic data that's going to come out in the next couple of days. That's going to change the direction, potentially, from a macro perspective. We'll get to the daily chart in a minute and see where it is exactly, okay? The paper hands, diamond hands testing period is still going on. In Wyckoff method, we call that the accumulation cycle, but essentially that's a period where the whales are going to test the paper hands. Okay, only the diamond hands are going to stay after these kind of roller coaster shakeout, but if it's essentially is like a sideways trading range with quite a big range over there, about 300% for the case of FET now. This automatic rally is basically when the price bounced from the panic over stage, setting the initial low point, it has set the trading range top for the subsequent sideways trading. You see, it has been challenged once more in July after it was set back in May. Okay, so far we haven't seen a price movement coming up to challenge the light blue key level of 85 cents yet. But that's the confirmation we need in order to confirm people are really coming back. So what we need to see is a bunch of white candlesticks stacking across a couple of weeks or even a couple of months, heading towards that direction, combined with above average volume. All right? 3 criteria I mentioned. Okay, price rise. Second, challenging that level. Third, higher than average volume. I hope that's clear. That's the confirmation we need. Let's get to the micro. Here, we have talked about this downtrend. The price broke below the sideways trading bottom around the yellow key level of 18 cents 40. And the downtrend that started around mid-Jan lead us to where we are now. The price is still being suppressed by the yellow key level. It's trying to reclaim, the bulls are trying to reclaim that. We talk about this, about the dates, that the second opportunity we're getting is by the 17th. We'll get a confirmation. And just 2 days ago, or 3 days ago on the 14th, we get that confirmation. But that wasn't solid enough because the next day, the bears were trying to push it back down. The bulls did a good job here. You see the long wick from the bottom, closing the candle right above the ceiling, not only for one day, the second day as well. Today, we're getting a little bit farther from the downward channel ceiling. As long as the price stays above this yellow dash line, this intermediate support level of 16 cents 50, it should be safe in the near term. Okay, near term. Because in the past, this level has been broken and it has gone all the way to the bottom of the long-term playground, this white line over here. At one point, it went as steep as to the red key level of 0.052. Okay, so we definitely don't want to see that happen, but there is still a chance for that to come down. So if this has become an uptrend, let's draw a line over here where it is pointing to. Okay, we can use this because it's passed already. This is pointing to the 23rd. Interesting, right? So the same date, let me move this point to the right place. Around the same date, 23rd, we've got 2 dates over there. But this, the one at the bottom or below, isn't any useful unless the price is coming back down to the channel once again. If it continues to trade along this uptrend support, by the 23rd, meaning a couple of days later, you see these kind of data coming out, very heavy. If positive news comes in, by that time, we'll get a confirmation that the price is going to break above this yellow key level, 18 cents 40, and go back to challenge the bottom of the sideways trading zone. That's, from October last year. So if it gets back to that box or that channel, it is going to once again, do that range bound likely, if no bad news come out, provided that, okay? That's when we potentially get to see the price coming back to challenge the blue line, the 0.347, where the selling climax, the panic overstage bottom was. Okay, that's the very first step before it can get to even higher to show a sign of strength. If you are interested to access these sessions 2 days earlier, join the channel membership now. Here's another analysis for you. Thank you.